Hi, welcome to our Steady Trader presentation. We're going to be talking about the strategy stress tester and give a live demo. It's a really neat tool and I think you're going to like it. Let's begin with the typical disclaimer for anything to do with trading the stock market. And basically, it says that we're not brokers or certified financial planners. All posted results are illustrations based on simulated trade results. Past performance on this or any trading system is not indicative of future performance, and the information here is solely our opinion and intended to stimulate your own explorations regarding trading. My name is Roy Swanson. I've been trading for 20 years. I'm the founder of Steady Trader. I began trading when online trading first started out. In fact, one of the online brokers, DLJ, talked to me about working on their derivatives, but I went into consulting instead on trading systems. My partner and I have actually worked on about 25 years worth of experience on trading systems for individual traders working at home. So we know the strengths and we know the weaknesses of a lot of these systems, and we know why traders have trouble. That's why we started Steady Trader, to bring professional grade tools to individual traders. Today's agenda: why strategies do need a stress test. We'll go over that very quickly. Then we will do an overview of the SST, the strategy stress tester. We'll take a few minutes to look at the number one money management trap. It's a little trick that you should know about. I like to give a takeaway that you can use in your trading after the presentation. We'll do a live demo with the product itself, with the modeler, and at the end I'll tell you how to get a free copy of our book. Read this first. It has all the research that was used to create our trading systems and the stress tester itself. You get a free copy of that book. Just stay to the end. I'll tell you how to download it. So why are we here? Well, you've heard it before probably. Trading, even your own account, is a business. And it's easy to say, but what does that really mean? Well, the way I look at it, if you have a business and you manage a business managers use models. I was a business manager, everything from a small department to a large division of a Fortune 500 company before I went into trading. And ever since the 1980s, really, I mean, this is going way back, and PCs, business managers have had P&L spreadsheets to run their businesses. I mean, this is just a tool every business person uses. Sales and revenue models as well as P&L models, and it's a way to make monthly adjustments on performance and monthly controls of costs. If you were trying to start a business, there is no way you would get any venture funding without showing a P&L spreadsheet model. But even working within a company, your boss and your boss's boss and the CEO wants to see that you have a model that makes sense. Why do business managers use models? Because models create an environment of no surprises. Because when you run a model, you actually run several versions of the model to do a best case, an expected case, and a worst case. Everybody puts down their expected case in the budget, and this is the number we had to hope to hit. But you definitely have to do a worst case so you can prepare if things don't go the way you think they will, and the best case so you see what the actual, what are the potentials for great rewards so that you work harder to hit your numbers. Models are incredibly empowering and inspiring and give people a lot of control over running a business. And business managers use models because one or two metrics can be very misleading. Let's apply that to trading now. As traders, we all know that an earnings report without revenue is only half the story, vice versa, revenue without earnings. So, I think that's a perfect example of how one number, whether it's earnings or revenue, just doesn't tell anything. And when it comes to a trading strategy, one number like percent winning trades or percent of average gain per trade really tells nothing about the P&L potential for that model. A trading P&L model has four areas. Has costs. You have to know how much money it costs to fund a trading strategy. This can vary by a lot depending on the strategy. Commissions go in there, of course, and stop losses. Stop losses, the way we look at it, that controls your costs. It makes cost, into something that is perfectly knowable. Every trading strategy will have losing trades. Stop losses are how you put that into a model so that you know what your losses will be. You have an activity level for every trading strategy. These are things like the dollars per buy order. Most systematic trading systems will say spend the same amount of money on every buy order. You've got the number of trading days, whether it's 1 or 2 or 5 days a week that you're going to be trading. And then, of course, the ratio of signals to orders to trades, especially this ratio of orders placed into executed trades or the execution rate. Third area is performance. Of course, this is what everybody wants to see, the percent winning trades, the gain per one trade, the average days held. These are the ones used in all the advertising. But once again, while they are important, they do not begin to tell the story, and that's why we feel everyone should have a P&L model. I certainly wouldn't trade without one. Finally, you've got the results, and this is the bottom line where the rubber hits the road. What is your percent net gain on dollar traded? For every dollar you put into the system, what is your expected or modeled net gain? What's your annual ROI in dollars and percent? So that you're basically doing better with your money than the overall indices. And a very important measure that's equal to the P&L and the ROI is your risk, your percent exposure, because percent exposure is the percent of your capital that's in open positions. And anything that's in an open position, as we all have learned, can be cut drastically, and it can really impact your ROI. So the percent exposure is well named because it is part of the risk of trading. Your model should tell you what that is so you can prepare for it, so you know which trading strategy basically is less risky or more risky than another one. Simple math. Now the system, the stress tester itself, the model, we've preloaded it with our own system, the Greenlight system, just as a starting point. You can plug in any values you want for your own systems. The Greenlight is a very accurate system, 70% winning trades, 3.5% per winning trade, 2-day holds, and this is what we're seeing this year in 2015. But again, you can put in any numbers you want for your own systems, and let's go over to the model itself. Take a look at it. This is the strategy stress tester. We call it the SST for short because it is fast. You'll notice everything is color-coded. The inputs are in blue. And that should actually be in blue too. Sorry about that. So you have your budget as we discussed. The size of your trading account that's needed to fund a strategy. How much you want to invest on a daily basis, what your buy order size is, what your commissions are. We've plugged in discount broker rates here. Your activity level, whether you're trading every day of the week. You can, maybe you don't like Fridays. You see how the model adjusts immediately. You don't like Mondays either. You only want to trade in the middle of the week. The model adjusts instantly, as you can see. And then you have your performance specs, your typical performance specs that you see on the advertising for any strategy, the execution rate, the average hold days, the average percent won or winning trades, the gain per one trade, and stop losses should you decide to set them. We believe they're a good thing again because they control risk. Over here you have your P&L in green, earnings are calculated for you. You've got the beginning balance based on what you plug in here. Your ending balance for the year, this is an annual P&L once again. Shows you your net earnings and your percent ROI. This happens to be a very high performing strategy. And then your risk profile, as we discussed just a second ago, showing your exposure in that ROI. This one is a pretty low exposure, 23% is exposed at any one time, keeping you basically in a pretty low risk situation. Now down here you have your cash flow section, daily cash flow section. Very important. You've got your starting cash, how that changes. Your starting cash has to be there every day to allow you to put the cash into the market that you want to, which is what you said you want to put in here, invest per day. Then what you're closing every day, which really is predicated on your, how long you're holding positions, how that settles. You've got the closed positions, closed with your gains, closed unsettled, and closed settled. And then you have, again, following the color coding, green earnings. Your account value has that changes and goes up over time, and your ROI. The cash flow section is rolled out for 1 full month, 22 trading days in an average month. That's basically long enough to see what's going to happen with any system, especially for trading on a regular basis if it's a systematic approach. So let's start playing with this model and show you just how powerful it is. And the first example, we're going to talk about that number one money management trap. And in our opinion, the number one money management trap is holding on too long. Because holding on too long on your positions is a less efficient use of cash, generally speaking, and it requires a higher account balance and leads to negative cash flow. All these things flow from the hold period, something that's almost never discussed, and we'll show you right here very quickly. We'll keep everything the same as our base case. Right here again, this column base case is where you plug in your base case. In this case, we've copied what we have for the base case in the model, but you can plug in any base case here that you calculate, and then as you play with the model, you can quickly eyeball whether or not it's better or worse. So let's do this right now. We're going to change our hold period. As I just said, hold period is the number one trap. Let's say we're going to do a strategy. Everything looks the same, but the holds are much longer. 5-day hold. Look what's happened here. Now, nothing's happened on the annual P&L. Still looks good on an annual basis, still very high percent. But look what's happened on your exposure. It's much higher, 68% versus 23. And look what happened to your account balance. Your end of day cash actually goes negative on day 8. And on day 7, your starting cash is not enough to cover what you want to put in based on your system. So the hold period, as we just said in the slides, the hold period is a less efficient use of your cash. And if it gets too long, it can lead to negative cash balances. This is just one example of how a really unstressed variable, who talks about hold periods that much, can really affect whether or not your strategy is profitable. We talk about efficient use of cash. What would you have to fund with to make this strategy viable? 30,000? Nope, still going into the red. 35,000? Yep. So instead of 25,000, you've got to do $35,000, almost double. And then look what happens to your ROI. Well, your ROI is considerably less. Your earnings might be the same, but it's on a lot more money. And your average exposure is still pretty much double what it was on the base case. So here again, one variable, hold period, flows through the model, has tremendous impact. Let's do just a couple more examples to show you just how powerful this model can be. Let's look at something like average percent one, often called the accuracy. A lot of people get hung up on this. Right now, our base case is 77%. Let's knock that down to 52%. From very accurate to only a little bit accurate. A little bit better than even money. Look at this. You still have an incredibly successful strategy. It's still at 34%. It's done nothing to affect your risk. That's a good thing. You still have positive cash balances, so you don't have to put any more money into the account. You're getting a lot more losing trades, but you know what? You're still coming out with a very good year, especially compared to the overall market right now or anything else you could do in a sense. So this metric of average accuracy is often really overhyped as in terms of the importance of it in the strategy. You could trade this strategy at more losers than winners. 40%. You're still doing 12% on the year in terms of ROI. Now, the dollar volume is not that great, but it's still highly profitable. So kind of surprising, and that's what's really kind of neat about a model like this is it leads to results that you don't normally expect, and that's why we build a model, because the model does the calculations and the math doesn't lie. We have all kinds of fantasies about what's important for trading, but a model like this will show you the truth. I think we'll take one more example, and let's just do the gain per winning trade. This one is pretty straightforward. Let's say you do much worse. You only do about 1.5% per winning trade. You're still doing very well, 17%. It's not nearly as well as the base case, but at the end of the day, you have a very nice return on the year. It's a very mediocre kind of gain per trade, but there aren't all that many people who are getting 17% of their money right now. And if you look forward, no warnings, the warning red, no warning bars anywhere on your account. So again, kind of a surprising result. Hope this is intriguing. Hope this begins to show you this little demo why a model like this that ties all the variables together is so important for anyone considering any type of systematic trading. If you're interested in getting the strategy stress tester, it's for sale at Steady Trader for $89. Regular price is $139, but we're doing a special right now. As we launch it, you will get a quick start guide, instructional videos, and as a special bonus, 1 month of the daily green light signals free. Those are the same system that's plugged in as the default. You'll get those free for a month. Let's see how you like those. Learning it is very easy. Log into a home page where you get your manual, your videos, your signals on green light. It's all right there. You log in, you can download the spreadsheet as many times as you want, make copies of it. If you destroy it, just download it again. As we update it, you'll get the new versions. So it's all there on your home page. To order it, just go to steadytrader.com. Everything, all your follow-up is simple. I want to make this easier for anyone. Just go to steadytrader.com. You can order the strategy stress tester there. You can get your free copy of our ebook. Read this first before you buy stock. You'll see a download link there for the book. I urge you to get that. It'll explain the research that went into building the stress tester and our other systems. And if you have questions, please send me an email at info@steadytrader.com. Again, strategy stress tester, steadytrader.com. There's our URL. Please go there, take a look. If you have questions, shoot us an email. Really thank you for watching this presentation, and I hope to see some of you in our scan rooms and elsewhere, other areas of our site in the future. Thanks again for coming.